Hello, welcome to the European Open briefing for Tuesday, January the 17th. I'm Rafi Boyajian, currency analyst at xm.com, and we're going to be looking at what's happening in the currency markets today. So the main news today is, of course, the Brexit speech by the UK Prime Minister Theresa May. That's due later in the day at 11:45 GMT. So all eyes are pretty much on what the Prime Minister will say about the UK's strategy for the Brexit negotiations. Expectations are that May will signal that the UK will fully leave the European Union, including the single market and possibly also the customs union. This has affected risk sentiment today. Asian markets were a bit mixed this morning, and European stock markets opened lower due to the potential impact of a hard Brexit. The pound, however, is doing a little bit better today. It's up from yesterday's 3 months lows. If you include the flash crash, if you exclude the crash that we had back in October, the pound hit a new 32-year low yesterday, although today it's currently trading around $1.21. The dollar isn't doing too well either, as markets continue to doubt Donald Trump's policies ahead of his inauguration on Friday, and this has led to a rise in safe haven demand. So let's start with the pound. We can see yesterday that a big drop where it dropped below the $1.20 level. It's bounced back this morning. It's up currently around $1.21. And as mentioned, the markets are now expecting that there will be a hard Brexit. The Prime Minister gave a hint of what to expect in her speech. She said that the UK will not seek a half-in, a half-out option. So that leads everyone to expect that the UK will not be staying in the single market once it leaves the EU. And also the UK is keen to seek its own trade deals with other countries. Therefore, it might be difficult to remain also as part of the customs union. We also had a speech by Bank of England Governor Mark Carney yesterday. He maintained the bank's neutral outlook over monetary policy in the UK. He said that monetary policy can respond in either direction to changes to the economic outlook. So for now, it looks like UK rates are staying on hold. Let's move on now to safe havens. We can see there the gold and the Swiss franc. Gold is it hit a near 2 months high of $1,214.98 an ounce, while the Swiss franc, dollar Swiss franc continued to edge lower. It came close to dropping below the 1 franc this morning, and that's mainly, as mentioned, due to the current uncertainty surrounding both Brexit and also Donald Trump's presidency, as Donald Trump has so far revealed very little about in terms of details about his economic policies, and that's hitting investor sentiment across the globe. The two currencies that are doing rather well this morning are the Australian and New Zealand dollars. They're both up around nearly 1% against the US dollar. The Aussie is it actually hit a 2 months high of 0.7548 early in the morning. It's benefiting from higher iron ore prices, although there are uncertainties ahead for the Australian dollar because it is vulnerable to what happens in China, because China is a major trading partner of Australia. Therefore, anything that might affect China's economic outlook would have a big impact on the Aussie. And at the moment, the biggest risk to China is, of course, a potential trade war between the US and China once Trump takes office. The New Zealand dollar is also doing well this morning. It hit a fresh 1 month high of 0.7182. We did have some strong fourth quarter business confidence figures out of New Zealand, and that gave the Kiwi a bit of an additional boost. Also coming up later today, there is the bi-weekly dairy auction, and of course the Kiwi is sensitive to dairy prices, given that dairy exports are important for New Zealand's economy. Let's move on to today's calendar. The main data out this morning will be UK inflation figures. UK inflation is expected to edge up to 1.4%. So we're seeing that consumer prices, headline consumer prices, are approaching to the 2%, Bank of England's 2% inflation target. And this is even before sterling's depreciation has fed into prices. So currently the prices are being led by the higher fuel prices, as the big slump we had in oil prices, that basically drops out of the index. So that could raise pressure for the Bank of England to raise interest rates at a time when there is economic doubt, economic uncertainty from Brexit. Also to watch, we've got the German ZEW Economic Sentiment Index. That's an important measure of investor confidence for Germany's economy. And as mentioned, we've got the dairy auction coming up later in the day. Also, we have a couple of Fed speakers, New York Fed President William Dudley and the Fed Governor Lyle Brainard. They're due to speak, so they may comment on monetary policy. That's it from me for today. Thank you very much for watching, and have a great